Ladies and gentlemen, thank you for joining me today. I want to start with a blunt statement. December 2025 is going to lay bare the disconnect between what many silver stackers expect and what reality is about to deliver. For months now, you've heard that silver is cheap, undervalued, a hedge against inflation, a monetary metal still ignored by the many, and yes, all that is true, but here's the thing. Being really cheap doesn't guarantee you get what you expect. Just means the expectation is ahead of the move. Let me walk you through what I see. First, the fundamentals. The industrial demand for silver remains robust from green energy, solar photovoltaic electronics. While supply is squeezed, mining issues persist by product issues flare. At the same time, the monetary demand, yes, from stackers, but also from institutions waking up to the idea of silver as more than just a sidekick to gold is brewing. In short, silver is quietly building the conditions for a structural breakout, but structure alone doesn't produce fireworks. We need the trigger, and that trigger will likely arrive in December 20 because that's when multiple stresses converge. The US dollar weakening, inflation surprises hitting consumer confidence, the Fed signaling shifts, risk assets wobbling, and investors running for cover. Silver being still underground relative to gold and lacking the massive speculation of the gold market is uniquely positioned. The short positions, the latent demand, the ignorance of the many all waiting, and here is what most stackers don't realize. This isn't going to be a gentle ride. Many are stacking silver thinking, okay, this will gradually appreciate. No, this is going to be a move that shakes you. Because when the market realizes the magnitude of the mispricing, when the short covering begins, when physical demand overwhelms available product, when flows tilt toward metals, it will be sharp, sudden, and unforgiving for those unprepared. Stackers who assume I'm safe because I already own silver may find themselves underpositioned or late. So, what should you do right now? You should review your position. You should ask yourself, am I properly scaled? Am I ready for what's ahead, not just what's expected? Am I mentally prepared for volatility because it's coming? December isn't just an ordinary month on the calendar. It will be the inflection point for silver's narrative. And to those who dismiss this as fear, mongering or hype, I say this, the markets don't care about your comfort level. They care about imbalances. They care about flows. They care about behavior, and right now, silver has more of the right behavior building up than most people realize. So, ladies and gentlemen, position yourselves accordingly. Don't be lulled into complacency. Recognize that the move ahead is massive, but the window is narrow. December 2025 will reveal how many were stacking silver and many were prepared for what's coming. In closing, if you believe in silver as a hedge, as a strategic metal, as an undervalued asset, good. But belief alone is not enough. You must act with urgency. You must position with awareness because the magnitude of what lies ahead demands readiness. December will not wait for the unprepared. Let's get right into it. We're not talking about silver as just another gadget in the investor's toolbox. What we're looking at is a structural shift, the kind that doesn't whisper. It shouts silver is poised for something far bigger than most believe, and I'll walk you through why that matters. First, the industrial demand side. Silver is not merely lying around waiting to be hoarded. Its uses are expanding and fast. From solar panels to electric vehicles to electronics, silver is embedded in the backbone of tomorrow's economy, means its role goes beyond mere savings or insurance. It is part of the production engine. Many investors still treat it like a dusty relic, whereas in reality, the metal is becoming more essential. Simultaneously, supply is under stress. As one commentary put it, record global silver demand and a lack of supply upside contributed to last year's market deficit. Shafied Fund 3 Shift Gold Comfrey. This is no coincidence. Second, look at the monetary hedge demand. When fiat money systems become shaky, people naturally migrate to assets with historical credibility. Silver has played that role for millennials, being ignored by many, which ironically is the advantage when an asset is out of favor. The potential upside tends to be higher, Recent commentary points out that silver offers so much upside with very little downside. Jerusalem Post: one investors who have piled into gold think they've done enough, but the real opportunity may lie in silver catching up and then racing ahead. Third, the paper market distortions. Much of silver's market is still dominated by derivatives, by speculation, by macro sketch gambles, and that creates a levered environment. When you overlay real physical tightness, as we have with large short positions or underround long positions, you get the potential for a sudden squeeze. One recent analysis says that silver's breakout and then the unwinding of the long gold short silver trade is becoming visible. YouTube Podgrain 2. This isn't the kind of scenario where silver just inches higher. It's the kind where upside waves hit and leave many behind. Now, when you stitch those three threads together, expanding industrial demand, growing hedge demand, and latent supply market distortions, you don't have a typical commodity setup. You have a structural breakout, the kind of breakout that isn't about maybe this year, but when and how far. Because the underlying imbalances are real, supply cannot instantly ramp. Demand is already marching, and the investment community is just waking up to the fact that silver isn't mere gold's little brother. It's its own story. Here's the kicker. Many silver stackers assume that by owning physical metal, they're safe and done. But if the move ahead is structural and sharp, then owning some may not cut it. Being properly scaled and mentally prepared matters, because when supply tightness shows up, when industrial demand spikes or monetary flows tilt in, the market tends to move fast. And in fast markets, underpositioning or complacency becomes expensive. In short, this isn't about silver may be trading higher because it's cheap. It's about silver breaking free from its historical shackles and fulfilling a much bigger narrative. One that has been set up and is ready for ignition. If you ignore the mismatch between supply, industrial demand, hedge demand, and market distortions, you'll look back and say, I knew something was happening. But the smart ones will say, I acted on it, the foundation is laid, now it's time to recognize it, not treat it as a quaint side bet. You said the trigger point. What specific catalyst will converge in December? Dollar weakness, inflation surprises central bank or investor flows into precious metals, investor short, covering to produce a sharp move, expend in 700 words without heading in Peter shift tone and style, but don't mention first the dollar. When the US dollar weakens, precious metals tend to rally, not because they're magical, but because the alternative fiat currency comes less compelling in the weeks ahead. The dollar is under pressure, rising inflation, waning faith in monetary policy, and aggressive fiscal expansion all weigh on the greenback. As confidence in the dollar slips, capital naturally flows toward assets with intrinsic value, and silver stands right there. As one of the metal hedges, it will benefit when the dollar begins to crack. The second, inflation surprises. The current environment is rich for inflation to surprise higher. Whether through wages, energy disruptions, supply chain chaos, or fiscal stimulus, when inflation prints higher than expected, interest rate trajectories often shift, yields may stay lower, real yields turn negative, and the case for holding non-yielding assets like silver becomes stronger. In that kind of scenario, investors say, I must hedge now rather than later. That sense of immediacy is what turns a slow grind into a rapid move. Third, central bank and institutional flows. Historically, large institutions and central banks don't wake up the moment a breakout happens. They wake up when they sense one is imminent. The signal for them to act often comes from a confluence of stress, currency volatility, geopolitical risk, and unexpected inflation. In December, we'll likely see more of these signals, and with them flows into precious metals, ETFs, physical metal purchases, and reallocation from traditional asset. When institutional players shift their allocations towards silver, or at least heavy metals in general, that drives momentum. The size of these flows matters. Small stacking alone doesn't move markets like a big institutional reallocation. Fourth, geometry of paper markets and short covering. Too many investors underestimate how much of the silver market is still dominated by paper derivatives, futures, contracts, ETF exposures, leverage positions. If silver's fundamentals begin to crack the door open, then hedge funds or speculators find themselves short. The unwinding of those positions can accelerate the move. Once the short position starts squeezing, you get a cascade of shorts cover as physical metal remains harder to access. And as premium for delivery rises, the price leaps. In December, when one or two of the underlying catalyst hits simultaneously, the trigger likely lies in this dynamic, the short side getting burned while the long side fights position. Fifth, sentiment turning. Popular expectation has often been complacent. Silver is cheap, it'll go up slowly, but when expectations shift to silver might skyrocket, that's when positioning changes. In December, if the public and professional mindset changes from maybe to now, more money will rush in, then the rush itself becomes its own catalyst. The psychological shift matters because markets are reflexive. When people say we're late, they jump in and that amplifies the move. And when you line all these up, weak dollar inflation surprise large flows into gold and silver. Short covering and shifting sentiment, the result isn't incremental. The move becomes sharp and the time frame tight because the market doesn't wait forever for consensus. Once multiple trigger points converge, momentum builds quickly, and everyone who didn't act early is left scrambling. So, if you're sitting on the sidelines stacking silver, thinking I'll buy later when it becomes obvious, you may find that what becomes obvious is already behind you. December isn't just a calendar spot. It's the month when all these pressures amplify each other. The metal goes from undervalued to underpositioned, and in that gap lies the big move. Now, there is no guarantee of perfect timing. There are always variables and perhaps some catalyst shift earlier or later, but the logic is simple. Structural imbalances are present, the trigger environment is forming, the market is being wired for a breakout, and December is the most likely window where those wires connect and the spark hits. If you are serious about positioning ahead of this, you must prepare now, not after the moves start. Because when December rolls in and those catalysts begin aligning, the market won't pause for hesitation. The trigger will fire, and those ready will benefit. Those waiting may just watch from the sidelines. In short, the setup isn't incremental, it's explosive, and December 2025 isn't maybe the month. It's the month when multiple triggers converge and change begins. It's time to act with not just conviction, but urgency. Let's walk through what most silver stackers are not considering. The risk and the opportunity in a straightforward tone inspired by how I talk about markets. This is bigger than you think. And if you're not ready, you might regret being complacent. You bought silver because you believe in a hedge and protection and owning something tangible. That's good, but owning silver isn't the same as being prepared for what's ahead. The opportunity is huge, yes, but so are the potential mistakes from underpreparation. First, the opportunity. Silver is still undervalued in the sense that many haven't priced in what could happen when multiple forces converge. When monetary debasement accelerates, inflation bites, the dollar weakens, demand spikes, and supply remains constrained. Silver isn't just going up, it could leap. That means if you're positioned now, you're not just buying a metal, you're buying optionality. You're buying the chance that something big happens and you're already on board. This isn't marginal upside. We're talking multiples, and yes, this is what you signed up for when you stack metal. The rare moment when the narrative catches up to the fundamentals. Now, the risk side. Many stackers think, I own silver, I'm safe, I'll sleep fine. But that's the dangerous mindset. Why? Because safe only holds if what you expect is modest. If the move ahead is huge, being modestly invested becomes being underinvested. If you assume silver would gradually drift upward and it instead bolts higher, your share of the move could be small. Worse, if you thought your storage plan, liquidity, or access to metal was sufficient for normal times, you may find it insufficient in extraordinary times. In a breakout environment, access costs rise, premiums widen, delivery becomes harder, spreads widen, physical becomes scarce, and if you ride that wave ill-prepared, you face being laid or having to pay more than you thought. Another risk, complacency and timing. You stacked when silver was cheap. That gets you half the job, but the move ahead may not wait until you decide to add more later. The market might shift while you wait. If you're waiting for the confirmation, you may end up watching the train leave the station, and when large players move, when shorts get squeezed, when industrial demand spikes, the market can shift faster than you think. By the time you notice the opportunity, the sweet spot may be behind you, and there's the psychological risk. Assuming this is just another commodity, that assumption limits your thinking. If you expect silver to move like a normal commodity, you'll be surprised when it doesn't. When metals become monetary hedges, when markets reprick entire asset classes, the speed and amplitude break traditional patterns. If you're prepared only for a 10 to 20% move up, 100% or more happens, you won't be ready. So, how do you position ahead rather than react after the fact? First, scale your investment based on your conviction and readiness. If you believe this moment is structural, you must treat your silver stack as more than a sidebar holding. Make it a core hedge. Second, ensure liquidity access. Physical availability matters. You need to have your metal where you can access it with delivery possibilities. Storage secure, premiums manageable, because in a rush, premium chaos hits. Third, review your timing and risk tolerance. Are you ready for volatility? Because the faster silver moves, the less room you'll have to add later. If you want that ride, you must buckle in now. Fourth, mindset shift. Recognize you're not playing a slow grind. You're playing for a breakout. That means your risk management must change. The downside is limited. You already own, but the cost of regret from being underinvested is large. In short, the opportunity is compelling, maybe once in a cycle. The risk isn't that you lose everything. The risk is that you gain far less than you could have, or that you pay a higher price later, or that you remain sidelead while others ride the wave. Many will wake up December and say, I was stacking, I was safe, but they'll miss the bigger move because they treated silver like a slow insurance policy instead of a strategic event-driven strike asset. If you truly believe in silver's upcoming role, act now. Don't wait for the obvious trigger. By then, you may already be too late. Position accordingly, scale appropriately, prepare for turbulence, and expect the unexpected. Because when it comes, you want to be the one who acted, not the one who wished they had. So, as we stand on the edge of what could be the most defining moment for silver in decades, understand this. History doesn't reward hesitation, it rewards conviction. Every major wealth shift catches most people off guard, not because the signs weren't there, but because they ignored them. Right now, the signs are flashing everywhere: the currency strain, the inflation pressure, the growing distrust in paper promises, and the tightening grip on real tangible assets. Silver isn't waiting for permission to move. It's waiting for recognition, and when that recognition comes, it will be too late to get positions cheaply or comfortably. You can either be the investor who saw it coming and prepared, or the one who tells the story later about how you almost did. Choice is made, not December, it's made now, because when the dust settles and people look back at December 2025, they'll divide into two camps: those who acted when it mattered and those who wish they had. The window is open, but it's narrowing fast. Act before the market forces you to, because the biggest opportunities in history never come with an announcement. They come quietly just before the noise begins. And that noise is coming soon. ChatGPT can make mistakes. Check important fill.